Hey, what's going on, everyone? All right, so today should be a very quick video. We can see on the SPY here, we were saying that this trend line, this blue trend line here, was going to act as clear resistance until we broke back above it and started to trade above it. All right, so clearly you can see that it did not cross above that line today, and that same blue line has been an uptrend line and level this entire time that we've been monitoring. So it is a clear level of resistance currently. All right. So the level that needs to break for the SPY for us to reclaim this level for tomorrow is going to be approximately 449.70. Okay. The closest level of support on the SPY is going to be 447.11, which is the prior all-time highs from August 16th. Okay. So I want you to realize that we're currently at resistance on the SPY. We just crossed above on the MACD, and we are not yet overbought on the RSI. Okay, so this is the first day that the MACD crossed above bullishly on the SPY MACD, right? Now, when you look at the NASDAQ, the NASDAQ has crossed above much higher than the SPY, right? And it's much closer to being overbought than the SPY is, okay? And also, it also failed to reclaim an uptrend level that basically was synonymous to that uptrend level on the SPY, okay? So the NASDAQ and the SPY are both at key levels of resistance that were once uptrend levels, all right? So the level that needs to break tomorrow for the NASDAQ is going to be approximately 375.50, okay? So 375.50 needs to break, and of course the support that needs to hold now for the Nasdaq is the prior all-time highs at 369.91. If we do bounce back off of that level, so as you can see, the Nasdaq opened and closed outside of the upper level of the B band. Okay, so that is not necessarily a very bullish sign, but we need to see, you know, if this right here, this is a bearish signal, usually, right? But like I said, in extremely bullish market environments, we can easily be trading outside of the upper level of the B band as long as we are trading above different levels of resistance. But now, if we do look at the NASDAQ and you look at the patterns of when we are trading outside of the upper level of the B band, usually what happens is almost every single time is when we are trading this overextended, if you were to buy puts for 2 to 3 months out, right, those would always be profitable. So over here, you can see that we're very overextended on April 6th. But we're trading outside of the upper level of the B band. But of course, this does look very, very bullish, right? Right here. This looks very bullish, but we're trading outside of the upper level of the B band, right? So if you were to be conservative and buy puts for 3 months out, right? Still assuming that there could be a move upward, right? Eventually, yes, it does go up, right? But eventually, if you were to buy the puts within 3 months, actually within a month, if you bought the puts 3 months out, within 1 month to 1.5 months, these puts would always be profitable. So you can see the same thing happen January 25th. You buy it for 3 months out, you can sell it anytime here. Same thing over here. 3 months out, you can sell it down here. And literally, it's a pattern every single time. If you buy puts 3 months out from a very overextended level to the upside, it becomes very profitable, and it's a 100% success rate trade. So let's see if sorry about that. So let's see if the NASDAQ can cross above these levels of resistance, and if the SPY can also cross above this level of resistance. But what is most interesting is that the IWM crossed above a very key level of resistance here, which is the 50% fib level at 220.87. Okay, so the fact that the IWM still crossed above a level of resistance while the SPY and the NASDAQ are basically failing, right? That is a good indication of what is potentially to come. So the fact that the IWM bounced the heaviest and is clearly trading above key levels of resistance, that can mean that, as you can also see, the IWM is up 0.98% compared to the SPY and the NASDAQ, only up 0.3% and 0.16%. So what can end up happening is all of the profits that are being funneled into the IWM can then be transferred into the SPY and the NASDAQ. So we can pop up just a little bit more, start to consolidate above 220.87 or above this trend line here. All the while, this is creating a bullish formation. All the while, the SPY, reclaims this trend line, and the NASDAQ reclaims this trend line. So those are some things that could happen. This is one of the reasons why I was extremely bullish on the IWM when we were trading outside of the lower level of the B band. Same concept. I bought into calls for 3 weeks out or 2 weeks out for on the September 3rd calls, and I alerted them on Twitter. And then I also said, I was gonna buy more between 212 and 213, and it was because of this trend line here. We bounced off of that. We came outside and bounced the heaviest out of all of the other indices. So, now we just need to see if the SPY and the NASDAQ will fail at these levels of resistance or if they'll reclaim it. And aside from that, that is really it for the overall stock market. One thing to note is that when the 30-year yield does not look very bullish, then the NASDAQ can also fall. So during this time when we were falling, right, the 30-year yield actually looked very bullish. But today, it does not look very bullish. We can see that the MACD is overbought and is looking to cross down below, which means that the 30-year yield can potentially fall down lower, which means that the NASDAQ can potentially come back and retest these levels of support and then continue on higher, similar to what the IWM is doing, right? But you can also see that when the 10-year yield is bullish, then that is bullish for the IWM. So you can see that the MACD on the 10-year yield looks like it's about to cross back above, which means that it is bullish for the IWM, right? So there's my analysis for the overall stock market. The dollar is not as relevant currently. You can see that there is an uptrend here, but we're just gonna monitor the dollar in the days to come to see if there's the correlation holds between the bonds and the indices, right? So there's the analysis on the stock market. Now I guess we can go ahead and talk about Bitcoin and the crypto market. All right, so very plainly, we've been monitoring various different trend lines, and as we broke above these two key levels, key trend lines that we've been monitoring this entire time, it was a pretty good indication that we were going to start going higher, right? So currently, very plainly, the level of resistance that needs to break now for Bitcoin is 51,374, which is the 618% fib level. And then the closest level of support is the 50% Fibonacci level at 47,197. Okay? If 47,197 breaks, the next level of support is going to be approximately 45,716. Okay? We can see that the MACD on Bitcoin is crossing down below, which is not a very bullish sign. That means that we can fall down lower. So we need to see if we do collapse a bit here, back down to 45. There's that for Bitcoin. We can look at Ethereum now. Very similar. Ethereum is also sitting at resistance. It needs to cross above right here at 33.64, which is the 618% fib level. And of course, the level of support is 30.50, which is the 50% fib level. And Ethereum looks much better because it's not overbought, actually oversold on the MACD, which means that momentum can still go on higher. Whereas on Bitcoin, the MACD is above, which means that momentum can still go lower. Okay, so that's what we need to take into consideration. Aside from that, there's my analysis, and I hope you guys have an amazing day. I'll see you guys tomorrow.